Good morning, everyone. Today is May the 15th, and this is Trading Market Futures in 5 charts. Taking a look at the ES, we did bounce at this support zone, come up right into resistance. This is exactly what we were anticipating. Now, the question is, do we move further down or do we hold this level? This is sort of a do or die space at 28.26. So in order to think about long action, we either have to double bottom here or bounce up and hold this edge. Right now, we can see some positive pressure building, not a ton of bullish action, a lot of negative data coming out, and yet charts are bouncing. I think this is technical bounce action, and so we'll watch for technical movement to continue. Holding this edge should come up, fill the gap, and then we'll be in better shape. We've got to close the week above 28.3675, or the big trigger from the weekly formation will force us down into these lower levels. Right now, today, I anticipate a very messy price action event. We've got momentum moving in different directions across certain time frames. The biggest momentum indicator that you want to look at if you're trading in the intraday markets, in my mind, is taking a look at that 30-minute chart, watching it come into support. This is a bounce zone right here at about the 28.17 to 28.16 area. It's going to try and hold that zone and get up over this region. Notice there's pressure building on the bullish side, and my suspicion was that the real area of congestion is really somewhere up here in this particular noise. This is going to be the next swing area to go short in my mind. So here's what I'm looking at. Right now, our swing position, if you're reading the blog every day, our swing position said, hey, listen, we're going to re-engage up here at this 28.49. This is short. It's moving down. This 28.26 is a target zone. Now, because I'm looking at momentum moving up and I'm trading around a big swing position, it's telling me, listen, take some profit. You could see an upward swing into this anywhere from 71 all the way down to 63, really, in the space where we'll see sellers just come in and start being really messy in that formation. That's where I'm going to look for the next real trigger short. So I'm going to be very much trading around my position and going back to small size if this does that. And if it breaks through this area, I'll close up until we move into the next zone, because I am primarily moving in the direction of the swing trend short until that reverses. All right, I do hope that you join me for the webinar today. We're going to be talking about setting these levels, looking at how they work on big time frames, and then because of the fractal nature of the market, you can telegraph that information down into your tight time frames. Check the blog. It's called Learning to Trade with Precision. Really looking forward to seeing everybody there, and bring your stocks, things that you would like to look at. Here, same sort of thing. Bullish pressure event coming right here. We can see it bouncing off this edge. I suspect it really moves up here. Faded pretty sharply off of this zone, but pulling a higher low. We can see momentum building. This is pre-market action, so it's got less volume. Not a lot of buying pressure here, but the buying pressure here didn't tell us the chart was moving up. My thought is we've got a cross current, so the edges are going to bring us bounces. The big spikes are going to give us reversals, and we've got fades sitting here that got filled, so we're likely to retrace it in terms of filling the formation. All right, let's get to the YM, doing the same thing, taking a look at this forward action. This is a bounce zone. We're in really tough shape down here. This is really aggressive. Buying pressure telling me that fade action should give us a bounce. Really, the wicks right here, because of price pressure moving in that opposite direction, should tell us the dips down will give us a bounce pass. But that bounce is not likely to hold. There's just a ton more bearish formations sitting in the chart. My suspicion and my suggestion based on that suspicion is, because of this bounce occurring, just sort of like a knee trigger sort of event, allow it to move down, and then try to recapture. Then look at your tight time frames, see if you've got momentum holding and you're moving forward. You know that I believe that oil is in a fade. It came in, broke through this trend line. You know, that trend line was up just a little more than that, but it did fade here, trying to hold. We've got the EIA today trying to build pressure, but I got to tell you, spikes going to be fades. They are. They're going to be fades. We've got the event of, hey, listen, we have a slowdown coming. So I do expect it to run into 59 all the way to 58, maybe even more than that. But at this juncture, what am I doing? I'm looking at this moving average. I'm noticing I have lower highs and lower lows. And so because my MACD is suggesting I have negative pressure, I'm looking at the bounce action that fades that allows me to go short. That is the wisest thing for me to do in this environment. Lastly, taking a look at gold. Gold is giving us this sideways chatter. As I mentioned to you yesterday, I believe this thing is in a big wide swath of noise. Markets could bounce, markets could fade. In the end, my thought is that it's trying to hold and build a volume profile event in the current contract with this area. It's very shallow. The volume event is very, very shallow here. And so I suspect we spent some time here. It was a little shallow here, and we came, moved up, and then came down and filled it again. It was shallow here, and we came up, moved down, and came through it again. Now the shallow events are up here, and so chances are we will chop through, 1291 to 1304 for a bit. All right, good luck trading today. I know this was a swift report, but giving you all the things that you need in my mind. Join me at noon today for the webinar.